Disclaimer. This presentation is not investment advice. This is not an offer to buy or sell any security. The information contained herein is believed to come from reliable sources, but we can make no guarantee of its accuracy. Please review our disclaimers and terms of use/service at our website. investwithwillow.com/disclaimer.
Welcome, everybody.
Welcome, welcome, welcome. So Paul and I were chatting before we started this presentation about our designation at the DACFP and the fact that we're one of the few investment advisors. Hedge funds are doing this and they're being done sometimes through private equity, but we are one of the few, if not, one of the few advisors.
One of only a handful who
One of
have
only,
type of offering available to retail investors.
yeah. So it's kind of fun. All right. So let's see what we got here, Paul. We got some good news on the horizon here.
Yep. So just to give everybody a quick quick recap. It's been a while since we've done a crypto sort of only webinar. So we're going to catch up on a few things, look at some of the metrics that help put some value on the space, go over how our current strategy is allocated in the whole digital asset world, and then cover some of the news topics out there that are relevant to today that we find highly interesting.
Yeah, which is really interesting because you're seeing more and more headlines hitting mainstream. So that's good for, I think, in general, for people to see that this is becoming more of an everyday conversation.
Definitely.
All right.
So to start, let's go. So this chart just shows the total cryptocurrency market cap, which isn't the greatest metric to determine its overall value, but arguably it's one of the few data points that we have to put a number to things. And currently we're at about the $2 trillion mark for the entire crypto space. It peaked out in November or so at 3 trillion, had since come down some, sort of bottomed out in this sort of the past quarter really, and now has slowly starting to creep back up.
So this is very interesting. I'm sorry, Paul,
Yeah, I was just going to add a few points to put this in context. So like $2 trillion, what is that even in relation to? If you look at something like the market cap of gold, it's about $11 trillion. You look at certain, I forget where a company like Apple currently is, but I think it's around the $2 trillion mark, somewhere around there maybe. A couple other large multinational companies are at that stage. What I'm essentially alluding to is that should this thesis really play out and the crypto space grow as we imagine it could over the coming years, that there is much more room to grow.
Yeah.
So
I just want to say one thing. The market cap of the S&P 500 is around 34 trillion, somewhere in there. So, it's small in comparison to that, but it's also just beginning. But go ahead, Paul, what you were saying.
Just that when you look at, okay, how could you measure like how large could it get, or, what is the market that this is really chasing after? A lot of times tech companies look at it as something called a TAM, or a total addressable market. And that's how big of a space or how many people or potential buyers that are available for their platform or service. And so if you look at crypto solely through the lens of a digital store of value, which is, really strong Bitcoin narrative, that would say that the TAM is this $11 trillion gold market that's out there. But when you look at what smart contracts enable and the reality that they can do so much more than just a store of value transaction, the TAM grows exponentially with that. So, what entire industries theoretically have the potential to be disrupted through smart contracts and what a lot of this technology enables. So it's arguably a much, much larger TAM than just the gold market itself.
Yeah. And then, and also put in perspective, like just market cap of like Microsoft, for example, is like 2.3 trillion. So just to put it in perspective, it's I guess it would be like a large cap company if it were on the exchange, so to speak. So,
and this technology has the implications to potentially do much, much more than just one company. Right. Okay.
All right.
Here's a metric that looks at the total value locked across all of the different blockchains and different cryptocurrency space. And what that means is people taking their money, moving it onto a blockchain, buying a blockchain native asset or token, and then staking it with a contract or locking it up in some way to either provide liquidity to a pool or as a way to get yield out of something or to provide security for a network. So kind of mushes all that money that is locked and not easily accessible and says, well, how much money is that total? It's currently a little less than $200 billion. It also could be looked at as a measure of faith in this technology as a whole, because you're not going to lock your money up into something that you don't have at least some confidence around, or at least most people won't. I would hope. So this has grown, it's stalled out over the last quarter or so. The whole crypto market as a whole sort of pulled back, but it's still really in this range up here at the top between say 150 and 200, well, even higher than that, 230 or so billion. So that's actually, I would say, encouraging. See that it hold this level, even with all the uncertainty that's out there currently.
Yeah, and the thing is we expect pullbacks. Like again, this is going to have more volatility than the regular market because it's a new. We can't call it an asset yet, but it's a new, and we can't call it asset.
Well, it's a new technology, potentially a whole new thing.
Potentially a whole new asset class. Potentially, if the Feds decide to view this as an asset. So at this point in time, I mean, we would expect volatility just as the markets, with all this uncertainty going on, the market is pulling back, and we expected that here. So, yep. Oh yeah.
Just wanted to show how the total value locked is spread across different blockchains. The one in red is Ethereum, and then all these other colors here represent different blockchain networks. So you have like Terra Luna network, Solana network, Tezos, a whole bunch of different platforms out there. Part of the reason this is happening is that there's lots of money flowing into this space, lots of projects getting kicked off that have some great incentive programs behind them to drive more value to it. Another reason is that at about this time here, I don't know if you can see my mouse, but
we can. Yep.
Late 2020, the fees on Ethereum's network skyrocketed, and that means that there's a ton of demand for block space, which causes the transaction cost to use that and secure that block space. Those prices go up considerably. So before, where I could send a simple transaction, from me to Alexandra, and it would cost me, maybe $1 or less. Now it was costing me, $10 to $20 to do that. So a lot of people were saying, well, we can't pay these fees to do these lesser dollar value type transactions. So they moved to other blockchains.
But one of the things we want to impress here is Ethereum has the safest, the most secure.
Right. There's a trade-off. So moving to these other blockchains to get that lower transaction cost comes at the expense of security. So that's something just to be aware of. Now, to be seen, and this is pure speculation, but as the Ethereum ecosystem matures and the layer twos, and I can get into that later, but that are being built on top of it mature, it offers a scaling solution that could make many of these other layer ones, I'll call them, obsolete, or they have to really dig into whatever niche that they want to excel in. So we'll see how that plays out. It could be a multi-blockchain world. Most likely that's what we'll head into over the next few years. And it'll be interesting to see how the general public or people as a whole feel about giving up things like security for the sake of speed. So, a broader conversation. Nobody knows which direction it's going to go, but as of right now, it looks like, all this value is leaving the Ethereum ecosystem, but we could see that turn around if the merge that's coming up the summer is successful and layer twos mature a bit more so that they can more easily compete with these alternative layer one platforms.
Yeah, we think this
We'll
year
see.
is going to be critical for Ethereum. This does not mean that Ethereum is on its way out. If anything, you see large companies putting more money into Ethereum and building their networks on Ethereum. It's just that there are these other options that are faster, and therefore they're being utilized and cheaper. So that's it. So
At
but
the
this
expense of security.
at the
So-
expense of security. So you can bet your bottom dollar, a JP Morgan, a Goldman Sachs, these large companies are not going to risk the security for the speed. Not yeah. So, okay.
All right.
So what do we got?
I just want to go through these quickly just to
Mhm.
look at sort of some bigger trends happening in the space. This is what's called the sort of coin dominance chart. And it shows of that 200 trillion, how much of it is, actually Bitcoin and how much of it is alternative platforms. And this shows that, since 2013, Bitcoin's dominance has steadily decreased over time.
Despite the price going higher, which is
Despite the
okay,
price,
because
right.
because
which
it is.
also is, go ahead.
No, go ahead, Paul.
It's also a sign of a maturing,
Mhm.
arguably a maturing ecosystem where now there's more players, there's more money, there's more people being established, different projects getting established in the space. So it's all a good sign of growth. Might not be the best thing that some Bitcoin only people like to see, but this is to us this is all a good sign.
Yeah,
of
yeah.
space
It's
maturing.
broadening out. It's broadening out.
And you can see here too that this sort of dark gray, dark bluish line, this is Ethereum's dominance too, which has been steadily creeping up over that same time, which could be argued as a function of the functionality of the actual blockchain, right? Where Bitcoin is really good at sending a unit, the Bitcoin, back and forth from one person to the other. That's really all that it can do. With the advent of smart contracts and the ability to put code and things on blockchains, that's really where we see a lot of the growth and development coming from in the future. Here's some fun news stuff. I'm part of this, newsletter that I get every week. And this just shows all the venture financing that has happened in the past week. Each one of these dots here represents a fundraise of, several million to tens to hundreds of millions of dollars for companies. And this all just happened in the last 2 weeks.
Yeah, a lot of this coming out of family offices, some of the bigger money, going into this space through private equity. This is just the last week. So you week over week over week over week over week, we see this. If you compare this to where money is going into traditional assets, there's no comparison in terms of the growth of venture financing going in this direction versus other areas. It's crazy.
Yeah. Some
headlines.
real interesting headlines that we saw.
So, keep in mind, Janet Yellen just yesterday or the day before, no, today, it was announced that crypto is going to be transformative. Now, she was poo-pooing this in 2016.
2018, she had some very scathing remarks that were, extremely anti-cryptocurrency, extremely, this whole space is a joke. And now here she is a few years later, right?
This stuff makes me laugh. I know. I mean, you have to look forward. I mean, it's not that we don't think this is without risk, but this is when you start seeing these people, centers of influence talking about it this way, then you're onto something. ExxonMobil, I sent this to Paul in the middle of the night. I saw this. They're actually taking their emissions and using it, monetizing it, and mining Bitcoin. So I don't even know how big their portfolio is, Paul. Did they say that in the article?
Not disclosed as far as I know. But the fact that these multinational oil companies is finding a way to use its basically they're selling the the flare fires that flare off from the burning different
the emissions,
natural gas and things, to instead of being wasted and just going into the environment, to instead power Bitcoin mining facilities. It's
crazy,
amazing, and to see Fortune 500 companies spending the money to do that is talent, I would think.
And the other thing is, so is, these large companies are pushing for legislation to be able to put this on their balance sheet as an asset. So they actually want to be able to start being able to account, and they can't put it on their balance sheet as an asset yet because it's not an asset yet. So there is all this push to it.
And just our own little plug to get back to Janet Yellen's comment. We back in 2017 were saying, hey, everybody really should take a look at this. It's going to be risky, but there's something here worth paying attention to. So just want everybody to know we were on.
We are on this. Yeah, it's okay. I like that. I like being a little against the grain sometimes. So it's good.
All right. So real quick, just wanted to impress on everybody that this is sort of a time-in kind of game with cryptocurrency and owning it, because it's so volatile, that if you just look at it right year to date, you would say, wow, both Ethereum and Bitcoin are underperforming markets. A few percent to almost double, right? If you zoom out, look at the 1 year chart of this, SPY, S&P 500 is right in the middle, about a 9% over the past year. Bitcoin's down about 21%. Ethereum's up about 64%. So this paints a very different picture of this space. So
very volatile. You can see how volatile this is.
Then zooming way out, right, the past 5 years, it just shows that, okay, a lot of growth happens here. This is why even when you see these huge fluctuations in price, if you have the conviction, which we do for those, the crypto portfolios that we manage, the idea is to take a long-term approach, because historically, and now the past is no guarantee or projection on the future, but looking in the past, it really does signal that this is something, if you can weather that volatility, it's worth it.
Yeah. And something we can't illustrate here, but it's really important. Part of Paul and my work is we look at charts and we look at periods of what we call consolidation. If we were actually to actually showing you an S&P 500 chart, we can show you where there are points in time where the chart chops sideways. And those are periods that we call consolidation. And usually from those consolidations, there's usually a nice leg up. That's what you see in terms of chart formation. So you could really take a look at Bitcoin here. You can take a look at Ethereum here. And you can't see it in the S&P 500 because it's really flatline next to these. So it's kind of like a little, not deceiving, but you just can't see it. But what you see here is it's deceiving in that you can't see the chop in the S&P 500, which is significant. But you could see like Ethereum looked like it's really been kind of chopping sideways since the beginning of 2021. Like, look at this, it's kind of staying in that line. And it's the same, and it's the same thing with Bitcoin. It's been chopping sideways for quite a while. So that's not necessarily a bad thing from our perspective. What we want to see is, and Paul, you can just show it on the chart. Is the blue line, is that Ethereum? I'm trying to see.
Blue line here is Bitcoin.
Okay, Bitcoin.
And you can see it's been in this range since 2021 or so.
Yeah. So it really has to break above that point of resistance, and then it would not have overhead to the upside. Same thing with Ethereum. So these charts, they're a lot more volatile than we're seeing in, well, not really, because we see markets equally as volatile. You just can't see it on here. Yeah. Okay, so let's see, what else do we have? Oh, yeah, right. This is how we're positioned.
Yeah, quickly wanted to go over how we are currently positioned in the Willow crypto portfolio, or our flagship digital asset strategy. Currently, we have about 56% in what some people call the blue chip cryptos, which is kind of a funny name for it, but Bitcoin and Ethereum, essentially. What we term alternative layer ones are alternative platforms to Bitcoin or Ethereum. So that includes like Solana, which you may have heard of in the news, Terra Luna, Tezos, Phantom, we have in our portfolios.
Yeah, and Solana is, it's a cheaper and faster version of what Ethereum provides.
Yeah, there's different. Right, all of these different layer ones have different trade-offs, or you make different assumptions in terms of how secure is it, how decentralized is it, and how safe and protected are my funds on it from seizure from a centralized entity. And so it really should be viewed as a spectrum, with Bitcoin and Ethereum really taking up one end of that scale as being sort of the most decentralized. Another way to think of why decentralization is important is to simply think of it as corruptibility. Or anti-corruptibility. So the more decentralized something is, the less chance that it can be corrupted. The more centralized something is, the higher chance it can be corrupted. And because it would be really easy for a few people to get together to say, hey, we're going to make changes to this platform, or we're not going to allow this transaction to happen. It's very easy to do with a few people, but if tens or hundreds of thousands of people are validating, it's a lot harder to get all of them or half of them to agree to change the rules, essentially.
Yeah, and you're hearing more and more of these conversations around centralized, okay? Because there's been talk about whether there's going to be a digital dollar. And if there's a digital dollar, it would become more centralized. So to Paul's point, a little bit more controllable versus something that's not centralized. And that's what this provides. So that's what, yeah.
Yep. Then the rest of the portfolio is in decentralized finance. There's several really interesting projects there. Blockchain infrastructure. We have some metaverse exposure and different scaling or layer twos, which will be sort of like the next iteration of this whole space that allow it to be used by many more people at speeds, 10x where they are today, that allow all sorts of new use cases to be built on top of them too. Maybe we'll do a webinar down the road or by request where we can really dig into the merits of each
one of these.
But
yeah.
for now, we'll just keep it top level there. So.
Yeah, but the metaverse is a fairly new. What did we add that in the last quarter, Paul?
Yep.
Yeah. That's a new. Obviously, that's a new asset class there, or class for us. So,
all right.
Yeah. So do we have some questions, Paul?
Yeah, that wraps it up. So if anyone we have a couple questions that were sent in, but if anyone on the webinar here has any questions for us, feel free to type them into the chat. Might be a way to raise your hand and we can pick you. We can see how that goes.
Yeah, or we can even unmute. I think we might be able to unmute, but I don't know.
Yeah, maybe. Easiest way though would be to type something into the chat. I think there's a Q&A button too.
Cool. Okay, so let's get to the questions.
To do that. So one of the first questions that we got in was, please explain the pros and cons of leaving crypto on exchanges, as well as how risky is it to lend or stake crypto through exchanges? And this is really a great question because you hear all the time about security in this space and people getting hacked in this space. Are exchanges safe? Generally, yes, they are. Do exchanges get hacked? Yes, it is.
Yes, they do. Paul, you want to point to how our platform works in terms of, recently there has been a hack, but not because of the way ours is set up. It did not even affect us. So you want to talk a little bit
to put
about
it in perspective, right? When you personally use an exchange, it's on you to make sure that your operational security is top notch. If you mess anything up, if you click on a wrong link, if someone email phishes you and steals your data, that's really on you, not the exchange. And, that's a breach of security, but it's your fault. It is the unfortunate part there. So lots of people get hacked through those types of means where they get an email from someone they think they know. They click on a link, next thing they know, they downloaded some malware or something, and then somebody stole all their crypto. A lot of these exchanges have insurance or different things built in that can negate some of this, but there are also many less reputable exchanges out there too, as opposed to like the Coinbases and Geminis and FTXs out there. There's also a slew of, foreign-based ones. You just have no idea who's behind a lot of these. So.
But if you do know how to set up your private wallet and you're comfortable with that, that's something that, of course,
is always an option.
It's always an option and always a good idea. Just you have to make sure you don't lose your keys and you're really keeping on it. So
if you feel responsible and like you can manage over passwords and things, then owning your own private keys and taking self-custody is not a bad idea. So an example of an exchange is recently there was an IRA provider who offered cryptocurrency who was hacked, and client, not our clients, but client funds had gotten stolen essentially because they had a poor operational security around how things worked. To give you an idea of how secure our funds are that are held at an exchange, we custody our digital assets at Gemini Trust Company. The way that the infrastructure works is that you can't move funds. Even if someone was to steal my laptop and my phone and had access to all of my passwords, they still couldn't do anything with your funds, even if they could log in, because the way that we have the security set up is those kinds of money movements cannot happen without us directly speaking with our contacts.
Our third party. Yep.
Right, which is not the case for most other people, especially when you do this yourself, right? If I go and set up my own account and then somebody hacks my email, they can log right in and do whatever they want, with my funds. You can't do that through us, which is a phenomenal security point.
Yeah, so, it really is. Yeah.
Very proud of the guys over at
they're doing a good job for us.
Putting that stuff in place.
Yeah. What other questions do we have?
The second piece of that was how risky is it to lend out for crypto or stake through the exchanges? And it also adds an extra layer of risk. So it is risky. There are risks. It's not risk-free. More reputable exchanges, the risk is probably less. But at the end of the day, this is still all fairly new, and things can happen that people don't plan for that can cause unseen, what do they call it? Unknown risks, right? And known unknown risks can all happen. Is it safe though? It comes down to each person's really risk tolerance and what's appropriate for them.
And depends what you're staking, and it depends what you're staking. Exactly. Yeah. That's also really important,
Right. The asset that you're actually staking, or the crypto that you're actually staking, comes with its own risks, right? Because each crypto is different. So, so it varies. Next question I see here is, can government prevent movement of holdings to alternative investments as a tool to stem devaluation of its currency?
The government can freeze any asset pretty much. I mean, we saw this happen in Canada where they froze the assets of some individuals. So I want to say that they could freeze anything, and certainly, devaluing, making sure the dollar doesn't get devalued, I think is on everyone's mind right now.
And just to add a point of clarity, where the government can really step in is in that bank transfer. So if you have your funds and you're sending them to an exchange and you leave your funds on the exchange, the government can come right in and stop that, right? The second you take self-custody and move
private keys,
wallet that you own and you control, arguably the government has very limited, they can't stop you from doing anything. Now they could blacklist your address, and if you tried to then interact with an exchange to off-ramp your money, that could also, they could stop you there, but they couldn't prevent you from using or operating on whatever blockchain that you own your assets on. Now the off-ramp piece, that's a whole nother story. And that is actually why lots of these hackers get caught, because actually blockchains are a terrible place to commit crime because it's a public ledger. And so there's all different types of blockchain forensics out there where they can really track, okay, this person sent it here and followed this pathway, and then this account tried to offboard it, but they did it through a centralized exchange. So we have all of their information, right?
So that's really important too, to note that they do find the hackers much faster in this environment than they do in the banking environment.
Right. And I just saw the statistic the other day. It said something like someone did a big study and they said 0.05% of transactions might be used for illicit needs on all blockchains combined. Whereas when you look at fiat currency or the US dollar, something like 5 to 10% of all transactions are used for something illicit. So a factor of 10 higher in the dollar bills that are in your pocket than the narrative that some people try to put on cryptocurrency as like, oh, it's this thing that all these scammers use and criminals. It's like, that's just, the data shows that's just not the case.
The data we have anyway, right? So,
Yeah. Well, there's whole firms who are, and they could be off, but there's entire firms that are dedicated
Yeah, I
to
know.
blockchain
Yeah.
forensics and on-chain analysis that look at this kind of
Unbelievable.
stuff.
I mean, when you see companies, is it McKinsey, Paul, who's using Avalanche? Is it McKinsey? Which of the big
Possibly,
five
yeah.
is big five? One of the big five accounting firms is actually putting a lot of their things on Avalanche for their security. So, and that's a cryptocurrency. That's a fairly new cryptocurrency, right? What, 4 years old? I
Yeah.
think. Yeah. Okay. So, any other questions come through, Paul?
No, that's all I see.
Oh, wow. Okay. All right. Well, you know where to find us if you have
Yep.
any other questions. So,
Yeah,
do feel free to email us.
to reach out, right?
Mhm.
And if there's anywhere you'd like us to go for our next one of these, feel free to let us know. We love feedback. So, yeah.
Yes.
With that said, thank you everybody for joining.
Thank you, everyone. Okay.
Always feel free to call, shoot us an email, schedule a meeting. We're always happy to talk about this stuff.
All right. Take care, everyone. Bye.
Bye-bye.